Welcome to another exciting episode of the show called One Step, where we talk about the journey. And today we will be demystifying the world of finance and investing. I'm your host, Joel Bennett, and today we are diving into the captivating world of the stock market and also why it is essential for you to consider investing in various companies and exchange traded funds, also known as ETFs. Now, to get us started, let's break it down. What exactly is the stock market and how does it actually works? Now, the stock market is like a gigantic marketplace where shares or ownership stakes in companies are bought and sold. These shares are typically referred to as stocks or equities. It is a platform for companies to raise capital and for individuals like you and myself to buy a piece of ownership in those companies. So, when you buy a stock, you're essentially becoming a part owner of a company. So you may ask, why is it important to have ownership in a company? Well, ownership in a company can bring you financial benefits through capital appreciation and dividends, but it also allows you to participate in a company's growth and also in that company's success. The benefit is the potential for your money to work for you and generate returns while you sleep. I feel like emphasizing that one more time. You can benefit, you can earn, you can make money while you sleep. Who doesn't want that? Now, why is investing in the stock market so important? One step. And why should people consider it as a way to grow their wealth? And that's a good question. Now, investing in stock or investing in the stock market provides an opportunity for your money to grow at a rate that oftentimes surpasses the return from traditional savings accounts or fixed deposit. Now, think about it. Over time, it can outpace inflation, preserving and growing your purchasing power. Now, who doesn't want that? What role does investing in the stock market play in achieving financial goals and securing one's financial future, you might ask? It's a vital tool for building wealth, I tell you that, and achieving financial goals like retirement. Buying a home is another example, or funding your children's education. The power of compounding can help you accumulate substantial wealth over time. Now, there are three types of investments. When we talk about investing in the stock market, we often hear about individual stocks and ETFs. Now, you might ask, what's the difference between the two? Let's look at it this way. Individual stocks represents ownership in a single company, while ETFs are diversified investment vehicles that hold a collection of stocks, bonds, or other assets. ETFs provide diversification and are less risky compared to investing in a single company. I'll give you one for example. Microsoft. Microsoft is a singular company. Now, an ETF, on the other hand, is a basket of companies. Example of that would be a basket filled with Apple, Microsoft, Google, Nvidia, and maybe other tech companies as well. So, why might someone choose to invest in individual stocks? And in what situations are ETFs a better choice? That'd be a good question. Investing in individual stocks allow for more direct company ownership, and it's suited for those who enjoy researching and picking specific companies. ETFs are excellent for diversification and also mitigating risk. So ETFs would be considered less risky than investing in just one company. Think about having a team of individuals cleaning your house. Not the best example, compared to just one person cleaning your house. They're ideal for people seeking broad market exposure. An example I just give is, let's say you want to invest in the tech department. You buy an ETF, like for example VOO, VTI, and other ETF like the SPY, for example, which hold a basket of companies piled in one. Now, obviously, it's clear that investing can be rewarding, but it's not without risk, just like everything else. What are some of the risks associated with investing in the stock market, you may ask? Okay. Market volatility is one of the biggest risks, I would say. Stock prices can fluctuate significantly in the short term. It's also important to consider the risk of losing some or all of your money or all of your investments also, especially when investing in individual stocks. I would say stick with the big tech giants like Apple, Microsoft, Google. If those companies fail or you lose all your money, it must mean the world is coming to an end. But penny stocks, stay away from those. What I mean by penny stocks, companies that are just starting out, and are not really leading the race. So stick with the big tech giants. Now, how can individuals mitigate these risks and make informed investment decisions? Again, I mentioned before, diversification is a key strategy. By spreading investments across different assets or companies, you reduce risk. Additionally, stay informed. I would say log on to Market Mondays. Ernie Elisa, shout out to Ian, Troy, and Rashad. Those guys are really good when it comes to getting individuals informed and learn a bit about companies, market, and ownership in stocks. Now, for those of you who are new to investing, you may be thinking, what are the initial steps that I need to take to get started? Again, look into that program, Market Mondays, Earn Your Leisure. Those guys have been my role models when it comes to learning about the stock market. So start by educating yourself. Understand your financial goals, your risk tolerance, and your time horizon. Consider opening up a brokerage account. And for beginners, I would suggest buy some ETFs. ETFs can be a great way to enter the market. Now, what are some of the key resources or tools that new investors can use to begin their investment journey? I would say online brokerages, financial news, stay abreast of what's going on in the market. Websites and investment platforms offer tools and resources to help you research companies and make informed decisions. Also consider talking to a financial advisor. Shout out to Dermian Whitaker. Now, the stock market is again, I must emphasize, a excellent way to start putting money away, start saving, planning for your future and for your family. Now, the future of investing lies in technology and accessibility. We'll see more digital platform and innovative investment products. My message is this: start early, invest regularly, let time work in your favor. Don't let the fear of unknown hold you back. Remember that investing can be a powerful tool for building your financial future. The show is called One Step. Let's talk about the journey. What does your financial journey looks like? My name is Joel Bennett. You all take care and bye.